Well, let's take the conversation forward. Lyn Alden, founder at Lyn Alden Investment Strategy, is with us now. Lyn, thanks so much for joining in. So let's start with the U.S. market itself, because there's so much going on. One, there is the whole legal challenge to these tariffs. And the second, it's the jobs report on Friday, and then it's all eyes on the Fed. But in the interim, we've started seeing some weakness in stocks, some profit taking. How do you expect the next couple of weeks to play out?
I expect to be somewhat sideways to down. There are a number of headwinds. The valuations are pretty expensive. It's been a pretty euphoric market ever since the bottom after Liberation Day back in April. It's been a pretty relentless grind up, and I think some of the steam has to come out of that. And I think going forward, the tariffs are going to put some fiscal headwinds a little bit on the U.S. economy. We're going to see that somewhat offset by a dovish Fed, but that's not as powerful as some of the fiscal backdrop that we've seen. In addition, when Liberation Day happened and the markets freaked out back in April, credit spreads blew out, equity valuations went down over the concern around tariffs, and the tariffs today are roughly at those levels that the market feared back then. So I think it's rational for the market to price in some frictions going forward rather than kind of the euphoric situation that they've been pricing in for the past few months.
Lyn, are you watching developments here? Prime Minister Modi's visit to China, a bit of a realignment, it looks like. What's your sense, Lyn? As someone who's based in the U.S., how would you view these developments?
I think this is another piece in a structural move toward more of a multipolar world and a realignment. There's already been a multi-year trend, for example, of central banks around the world having more gold in their reserves relative to dollars and treasuries. That's partially because of price appreciation, but also because of different purchase rates, more of a shift toward gold. And I think that this current approach of tariffs further accelerates some of those trends. It encourages more bilateral trade agreements and things like that. Various organizations such as Shanghai Cooperation Organization and BRICS, BRICS Plus, they've had frictions over the years, but I do think that these are very real trends that are slowly coalescing so that countries around the world have these alternatives. And I expect this to gradually keep happening, maybe 2 steps forward, 1 step back, 2 steps forward, 1 step back. But I think it has legs to it.
All right. Hi, Lyn. Good to see you. And as always, well, you've been in the camp that prefers emerging markets over developed markets. The Indian markets have gone through a set of challenges. And those tariffs, they weren't just a negotiating tool because now they're implemented. What's your view on the emerging markets from here on? And where does Indian markets place? Because no two ways about it. We have underperformed of late. But obviously, in the longer term, we have got our tailwinds.
So I continue to be pretty bullish on emerging markets. My preference has been toward more Latin American markets. Brazil's another market that has been hit with pretty high on the tariff range, and yet they've managed to have decent performance this year. So it's kind of market specific. One of the things I've highlighted before is that with a weaker dollar this year, some of these previously underperforming emerging markets, such as Brazil, such as others, they've caught more of a bid this year. Whereas India historically has been a stronger equity performer, and they've generally suffered this year. Structurally, I'm still very bullish India longer term for multiple reasons that are pretty well known. But in the intermediate term, I continue to like and have a preference for some of the more value-oriented emerging markets out there. So the Brazils, the Chinas of the world, at least until we see some sort of rotation to the contrary.
Okay, so the B and C for now. Out of the BRICS, India, perhaps a more longer-term story. Got it, Lyn. Thank you so much for joining in. Good to have that perspective from you today.